Good morning, traders. Welcome to Friday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, as always, we need to check the news, see what's going on and when and all that fun stuff. So looking at the news calendar for today, we have a decent amount of news. There's a lot of things going on today. Starting off right at the top of the list, we've got the 8 o'clock FOMC member Barkin speaking, 9:45 manufacturing PMI. These are all medium and small news announcements so far. Market composite PMI and services PMI. And then the first large news announcement at 10 o'clock, existing home sales forecasted at 6.61 million. If we go along with that at 10 o'clock, we have the existing home sales for January. The forecast for that's negative 1.5%. Tentatively, we also have the Fed monetary policy reports, which will definitely shake the markets up a little bit. And going through the rest of the day, we go into our normal Friday stuff with the U.S. Baker Hughes oil rig counts, CFTC net, speculative net positions, all of those, but not really anything else that necessarily stands out. So the big thing going into today is the Fed monetary policy report, which is tentative, and then we also have 10 o'clock news, and those are the big things that we'll have to keep our eyes on. But with that out of the way, now we can jump and do some charts for today. Today being the 19th of February, 2021. First one up on the list is going to be the NASDAQ, and at the moment, obviously, as is pointed out by the giant text there, inverted head and shoulders beginning to set up. You can kind of see that if we outline it a little bit more clearly with like a yellow or something like that, but the break of the neckline is right there, and that's what the market is coming off of. Now, typically, when you're looking for an inverted head and shoulders, keep in mind, a head and shoulders pattern very frequently is nothing more than a continuation pattern, but for an extreme continuation or reversal. So what that means is when you have, wow, that was a bright color change for you, sorry about that. When you've got the continuation to the upside, we've got the head and shoulders formation, and then it starts churning back lower like this. Typically what ends up happening is we've got the break of the neckline, and what ends up happening is if you project this down from the top of the head to the bottom of the neckline of neckline A and B, whichever one you want to use, typically I like the shallower one, then you'll project down 100% and 200%. And what ends up happening is the market bounces off and acts as a continuation. So with that continuation in play, that realistically is just kind of saying that sellers will be interested. They're just going to be interested a lot further up. And where would they be a lot more interested? Right at the top. Perfect area for that to make sense, lining right up at the top, 13,870. Are they going to be able to rally all the way up there today? Maybe. Fridays are typically the biggest moving days of the week, and so they definitely got a shot at it, but typically the biggest moving days of the week are usually to the downside. So, I don't know. We'll see. But at the moment, the bulls are trying to reclaim their ground and get that move back up towards the top. On the S&P with a very similar situation, but with more of a kind of a wedge breakout scenario into a bear channel that's still kind of there. We've got the bear channel grinding lower, and it has proven itself. Right? It wasn't just a shot in the dark. We've got A, B, and C, and then it proved itself on D. So we know that the channel is here. The next thing is, are they going to respond at the top? So far, we haven't really seen much of a response. It's a nice wedge breakout, which you can kind of see right through here. If I kind of highlight it a little bit there. So it's a nice little wedge breakout continuation, and it is also breaking above falling resistance. The market is obviously bullish on the S&P, and if we zoom out, we're bouncing off of a very, very large zone of interest. And notably, it still held a higher low, right? It never actually made a new low. And given this strong reversal point to the upside, although we haven't broken a major swing, if we start seeing the market rallying back above the 3940s and breaking through this L4, then there's a very good shot that, although they'll probably pull back, we see more continuation back up to fresh highs again. This is the type of pullback that is more likely going to be a reload at this point in time, given the way that it's looking. So I'll have to kind of play it by ear, but that's sort of where it's at right now. Bulls have a shot, but sellers still have a lot of things in their favor. Over on gold, we've got a nice continuation to the downside with some pretty solid levels. The one concern that I have to the downside here is that we've got some very obvious divergence off of the lows, which would be demonstrating that potentially, at least, the lower portion of this, the underlying, is starting to lose its grip. It's becoming a bit weak down here, and that weakness is starting to get picked up by buyers trying to push it back up. We're not seeing a response of really any huge magnitude by any means, but we're seeing some decent pullbacks. In the next pullback, if we're looking at equidistant size, I'd put it right in an L1, right around the midline for a continuation back to the downside. However, if the market does want to pull back a little bit further, which it definitely could use, then a dip or a rip, I guess in this case, back into the L2 at the top of the channel would be a much more beneficial place for sellers to try to come in. And that would also allow some of this divergence on the lows to play out and get it out of its system. Next up on crude oil, we have a very nice bear move to the downside, and geez, yesterday we were looking at a bit of a megaphone in the morning brief. I know I didn't do the daily brief because of my lovely head face melting migraine, but we had the megaphone drawn up on the morning brief, and you know, I really I wasn't sure that it was going to hit something like that, and sure enough, man, it rotated all the way back down, and now we have a completely new potential trend. This is not just a big move to the downside. Congrats, right? This is a break of an actual structured swing. We have a move down, a continuation up. Even if you counted this one with another move higher, this broke all of them. So with this movement to the downside, sellers are trying to take back over. And the only thing buyers really have left is an L5 at the base. Usually if L5s are going to respond, they'll be aggressive. But that said, sellers at the moment seem like we're building a little bit of a brick wall sub 60 and trying to get the market to push back down again. So this could be a psychological breakdown back below 60. And then next week we might be seeing 54s again where that got messed up last time. Next up on the euro, we've got a massive continuation reversal off of the lows. And realistically, if we go back, we can see what happened. All that happened was they ran into that brick wall of major volume on the accumulation before the big rally took place initially. The fact that it pulled all the way back down to that zone, obviously it feels like you're buying a falling knife when it's dropping like that. So yeah, in hindsight, it looks fantastic and it looks like you'd be an idiot not to buy it. But realistically, that's a really tough buy. Once it starts rotating higher, sellers fail, sellers fail, sellers fail again. We're seeing the persistent failure from the sellers, and then it goes screaming higher. Okay, now we're gaining some proof, right? This is where a lot of buyers will start coming in. You can see the shelf that was sort of built by that support. So yes, this was the major support, but realistically, I don't think buyers responded until here unless they were accumulating, DCAing in, allowing a lot of extra risk. The conservative buyers who were waiting for more confirmation, they had their confirmation here and potentially a subsequent confirmation following through up here. Now it's fairly obvious that the buyers have some pretty good momentum, and here we have another good breakout move to the upside. With this kind of continuation, yes, we have an L5 from the sell side. Realistically, it makes a lot more sense that buyers are going to be wanting to try to dig into that bullish L1 for at least another attempt back up. Over on Bitcoin, we have that nice pullback down into the L1, L2 area, bottom of the channel, pinged right off of it, and that came after an attempted wedge failed breakout, right? The sellers tried getting that rotation down. They blew off the bottom. They tried again and just got steamrolled. So with this momentum to the upside, a lot of sellers, a lot of shorts, they're probably stuck here and they're looking for a way to get out, scrambling, in fact, because there's been no pullback. It doesn't even... Okay, no, I was going to say, it doesn't even look like they broke a previous candle's low. They did right there. That's really about it. So there is an incredible amount of bullishness here. The one concern that I have is this is a huge amount of bullishness after a very well-established trend. It's not like a big blow-off or anything like that, so I don't think it's overextended yet. But if this starts creeping back up towards the highs of the channel all in one move with very limited pullback, then we start getting a little bit overexhausted and it tends to want to pull back a little bit further. That's where you get those 20 or 30% pullbacks instead of just the 15s. So overall, this is a nice zone. Buyers are obviously aggressive, but I'm a bit reserved up here given the way that this is moving. So it's got to keep on chugging, or, well, realistically, if it gets too far up, then it might have just chugged a little too much. And then over on Ethereum, with a phenomenal looking channel to the upside, now that it's been a little bit more established, we have this kind of continuation up, the bull breakout, and this is where they kind of broke out of that previous structure, right? If we zoom out, we look at that larger momentum, the overall movement, we have the bull cycle to the upside. Just looking at obvious swings, even if you're looking at the narrowest, you've got right there, there, up, and, oh, they tried to reverse it, and then they failed that reversal and rolled back up to a new high. So realistically, all that ended up doing is just kind of made those little baby swings a bigger one. We've got an adult swing now. We've got the bigger pullback and another move higher. What did they end up doing? They ended up trapping the low of that swing and then rolled right back up again and did the exact same thing that happened over here. So all that really appears to be happening on Ethereum is that buyers are accumulating and trapping the living crap out of people who are just trying to hang on to put a stop underneath the low. So putting stops underneath major lows right now seems like it's a really bad idea because it just seems to get hunted out. Now again, that means that this last move just kind of grew up into an even bigger one. But realistically, what's to stop it from doing the same thing again? And that would be a bigger pullback down into the 1600s to 1650s, which honestly, I think Ethereum could really use. It's very, very overextended up here. That said, in the shorter term, we do have some nice bullish continuation to the upside, and a narrower pullback would be right along that previous zone of structure at the bottom of the channel and an L2 right inside the 1840s to 50s. So in the shorter term, we do have some bullish support, but there are definitely some concerns in the bigger picture that could be causing some issues that we might need to keep in the back of our minds. Alrighty, well, that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let the winners run. I hope you have a fantastic day of trading. I hope you have a fantastic weekend, and we will see you all back next week. Thanks.